Good evening. This is the Elliott wave update for the S&P 500 for Wednesday, May 25th, 2022. The market continues to play out and what I'm continuing to look at as a possible minor fourth wave here in the S&P. So on the daily chart, no changes. There are some things that are kind of becoming clearer on the hourly chart. So we're just going to drop straight over there, get right down to what I'm talking about. Now, in the S&P, the best way that I'm looking at this initial run up is that it is a five-wave structure, or at least a three, and it's an A. But I'm going to call it five because it's more of a zigzag. So unlike the NASDAQ, which truly is just a three-wave, an ABC, this I'm going to count and can count as three and then a five. So it's five waves up for wave A, three waves down for wave B, and now we're in an additional five-wave advance to complete a C wave to then complete the minor fourth. Now, what would my expectations be? I can throw, now they've been coming in less than, but the S&P's got a little bit more support from a lot of the other 500 component stocks that aren't getting pounded so hard as the NASDAQ stocks are. And even some within the NASDAQ, Amazon today, sparked to life. Facebook gave a little bit of life today. Tesla gave some life back today. So that kind of lifted up a great addition, part of the S&P, but then the Dow had a much better day than the NASDAQ. So that's benefiting the S&P right now. If I'm looking for five waves up in the form of C wave, here's my tickets. The first thing is that wave C would be equal to 0.618 of wave A. That's not the most common, but it's there, and we've now exceeded it, come back, and are stuck right at it. So I would continue to believe that this is going to be broken. I believe, and still holding on to, that the market will get above 4,000 again. It's very elusive at the moment, but I think the market will achieve it. I think the market may stand a very strong chance of getting up to 4,050-ish. And that would be where wave C is equal to wave A. And that is one of the more common. Outside of that, if we were to go the full Monty and go the 1.618, which is the next one up, and most common, would be 4155-ish, so it's 4150 to 55. Then we're also in and above that area. So I kind of think actually 4100 versus anything, because as Elliott has made observations and Prechter had included in his books, that a fourth wave will usually find its terminus, its endpoint, at the terminus of the fourth wave of one lesser degree. One lesser degree is the minute degree, and so that minor four would be expected at least here. And that's just right around 4,100. And that would put us up above the 100%. So our resistance for the S&P is 45 to 4050. Then we have 4061. Actually, that one doesn't come in. 4050, and then 4088, and then that 41, which are equaled right to there. So actually, the high of wave 4 and 1.236 line up the cleanest. So we're looking like 4085 to 4095 to possibly 4100. That would be the perfect scenario. The weakness in the NASDAQ, I think, will have an effect on. And if that weakness comes back with any type of a vengeance, then yes, we will see that play out also here in the NASDAQ. But for right now, upside, I'm going to continue to look for it. The moves that happen are quick and they're sudden, and they do move. This was 20-point drop. This was a 60-point rally, or at least 55, 56-point rally. Those are pretty nice rallies and declines. So both sides, we're still seeing the moves. So it's very tradable. in both directions. Hourly chart does leave open the possibility, though, that we may have completed right there. And that would do two things. It would show extreme weakness in the market, in equities primarily, and that would be a very quick and steady and hard drop from here. Now, that I don't necessarily expect, but we'll see. I am looking for continued to the upside and the support, and at least to get back above this level and on up above 4,000 and closer to there if they can. But at least 40-50, that would make a nicer picture. But still continued downside, and that will come in the form of a minor fifth wave. And that would be expected to break 38.07, and that would be expected to start taking us down to these levels down in here. All right, so I'm actually going to leave it there, as there's not much to be adding. The moving averages on the hourly chart, the 4 is the only one that's managed to go up and cross the 200, the hourly 200. The 8's on its way, the 20, they're both all pointing higher, but to put an extra oomph under this fire here, we need to see more of them above the 200 to give support to the upside continuing. So buyers are there, buyers are willing to buy, but not really get outrageous. So I think we're not really seeing a lot of the outside buying that go into some of these individual stocks. I think most of it is unfortunately options related. So I'm leaving it there. Our next update will be on Thursday, May the 26th.